So another intraday high for the TSX, now moving above 32,900. Let's talk about what is pushing this with Jim Thorne, Chief Market Strategist at Wellington-Altus Private Wealth. Thanks for joining us today.
Thanks for having me, Marilla.
So this is a part of a broader rotation we started seeing at the end of last year, but what sectors are pushing the TSX higher, and is it sustainable?
Well, 20% of the TSX is materials, and so we've had I would refer to as a generational run in gold and silver that gold bugs have been waiting for decades. And that continues this year. And I think the real question comes is how much longer can those two sectors go before taking a breather? And I think, long term, I'm very bullish on silver and gold, but, trees don't grow to the sky. And I wouldn't be surprised if we have a period, over the next couple of months where we digest the gains going forward.
Okay. So you see perhaps sort of a sideways trend perhaps later in the year, but let's get to the trade visit that's going on with our Prime Minister to China. Do you see the energy segment in Canada benefiting from maybe an agreement in energy or oil specifically coming out of this?
Yes, I mean, it would be positive, but I think the Canadians Canada has to recognize the fact that building one pipeline to the Pacific coast to shipping crude oil to China is not going to solve our problems. And we need to go through a period of significant structural adjustments. And we need to be honest with ourselves. Marilla, that last jobs report, while everybody was cheering about it, if you look under the hood, the public sector crowded out the private sector. In other words, it was the hospitals and the government where all the jobs were. I don't know how we're going to achieve what the Deputy Governor of the Bank of Canada wants with increased productivity when the private sector, the interest rate sensitive private sector, is still looking terrible and taking it on the chin with rates that are too high.
Okay, so let's talk a little bit about what is feeding into the private sector. Is it still uncertainty about trade? Is it still working through some of the tariffs? What do you think is feeding into sort of, I'm going to say, stagnation in the private sector, if you look at it that way?
I mean, first off, what we have is, remember, monetary policy works with a lag. So the interest rates that the private sector is dealing with right now was set 2 years ago. And so the private sector is dealing with excessively high interest rates set a couple of 24 months ago. And business people do not, I would suggest, aren't so sure that Mark Carney isn't a second coming of Justin Trudeau, in the sense that we've seen too many photo ops, too many meetings, and not enough concrete action in terms of policy that is going to structurally adjust the Canadian economy.
It sounds like you don't have a lot of faith in the way they're pushing the major projects through the office in Calgary and getting that money out the door to build.
We have to remember that this was the same song and dance from the Trudeau administration as well. I think Mr. Carney is making a mistake by not really going fast. I think people are really starting to lose patience with the fact that he's doing the same song and dance as Justin Trudeau. Enough with the meetings, enough with the meeting with the premiers and the photo ops, and we need to see concrete evidence. And I think the proof is in the pudding because of the promises that were made by the previous agenda, the previous agenda and the previous administration.
Okay, so when you talk about concrete evidence, what does that look like to you? I mean, this is a man who hasn't been leading for a year yet.
Well, we don't have a deal with the United States. He's waiting. He's delaying.
Is he waiting or delaying, or does that come out of Washington? We know the president hasn't been that interested.
I think if the Prime Minister was more motivated, things could get done. I think he's really letting the president take the lead, and I understand and I respect the fact that we need to have a diversified trading agreements and relationships with Asia and with Europe, but we have to be honest with the fact that our primary trading partner is the United States, and if we think that we're going to get ahead with not being significantly integrated with the United States, I think is naive. And I would say to Bay Street that those that think that the Trump doctrine or that national security strategy was something that we could wait out. I think that the evidence that happened, given what Mr. Trump did in Venezuela, and we're hearing rumors that Mr. Trump and the Americans are going to move in Iran, it's going to be very interesting for Canada, because what we're seeing is a generational change in the global energy market that 6 weeks ago the folks on Bay Street said was not going to happen, and we could wait the president out.
Okay, so how do you see this affecting the energy sector in Canada? Because as you mentioned, we need more infrastructure to get the stuff out to Asia, if that's where the uptick's going to be. So what would be the nearer term effect if Iran opens up, for example, there's more oil from there, and the Venezuelan reserves continue to pour out?
Well, I think, Morella, we have to be honest with ourselves, and that's what I've been writing about and suggesting is, look, stop the happy talk, right? We have 5 years of really significant structural adjustments, and when you look at the economic data, it's coming through that we're still living in a regime from Trudeau and Friedland. So we have to be honest with ourselves that one pipeline isn't going to make it. I would suggest why Mr. Carney isn't pushing hard to get the Keystone Pipeline going south is beyond me. And I honestly think that if he and the Canadians think that our economic predicament is the fault of the Americans, it's wrong. The United States is moving forward on an economic sovereignty platform. If you think about it, we look like a colony. We don't process our natural resources. We ship everything out. The high margin business goes to everybody else. And we need to understand that we need to start being honest with ourselves. And that goes for the Bank of Canada as well. We need interest rates lower. And if we could be honest with ourselves, that would be the first step. And I just don't see a recognition. You know, there's an old saying that recognizing you have a problem is the first step in recovery. I hear too much happy talk from Bay Street and the Bank of Canada that all is good, and it's not.
Okay, Jim Thorne, got to leave it there, sir. Always good to have you on. Thanks for joining us today.